Hi, my name is Jim Hilborn,
And I'm Tom Dinas.
and we
are the
Small Business Doctors.
And I've been taking care of business every day. Taking care of business every way. I've been taking care of business. It's all mine. Taking care of business and working overtime.
Hi, my name is Jim Hilborn,
And I'm Tom Dinas.
and we are the Small Business Doctors .biz. That's with a Z.
Biz.
Yeah,
I've started abbreviating business B-I-Z in all my correspondence now.
I
Just to
always spelled it
reinforce
that way.
There you go.
Business.
Biz.
What are we going to do tonight, Tom?
Oh, the excitement is in the air. You can feel it.
I can feel
You it. The
palpable
energy, yes.
rush.
We're going to talk about tax filing requirements for small businesses.
Okay, good.
Yeah, and basically we're going to be looking at some forms, and I'm going to be kind of giving you an overview of how things piece together.
Okay.
This is where this goes, and this. So even if, God forbid, you would want to prepare your own return, I would never recommend that if you're in business. Some people do, and it works out.
Well, if you've got a hobby business and you're low
Yeah.
at a low level, and it might make sense. We always encourage you to have a relationship with a tax preparer. That's right.
Right.
And,
But anyway, so at least know what you're looking at and know how your tax return comes together and the ramifications of what those numbers on those lines mean to you.
exactly. And the fact that you have to file certain taxes when you are in business, I think, is important. So, and so when you are in a small business, and we've done certain shows on hobby businesses and certain shows on small businesses, and so this show is probably for somebody who's recently in business or about to go into business. If you've been in their business for a while, you probably know most, if not all this. But
Surprisingly not. I
Yeah.
still run into clients that come from other preparers, and they don't really understand
why?
what, where, what for, and why.
Yeah.
And they go, oh, I never knew that. And I like to sit them down, especially the first year, and kind of go through the process that we're going to go through this evening.
Sure. So we've talked about creating a small business entity to separate you from business risk,
Right.
either from a form, and depending upon what you want your small business entity to do for you, then you can either assume a corporate form or in most states an LLC, and or something. There's other types of entities, but that's the two biggest ones. We discourage you remaining in what we call a sole proprietorship, which is where all of your money goes through you. It's the same checking account. It doesn't really matter because for legal liability issues and because you can take advantage of some tax breaks if you are a particular business entity.
Correct.
So when you're a business entity, you have to file a tax return for that business entity. Isn't that right, Tom?
That's correct.
Yeah.
Now, first of all, what everybody has to understand is that the LLC, the Limited Liability Company, when it was started, there was no references in the Internal Revenue Code for that particular entity. So the IRS said, we don't know it, we don't recognize it, we will consider this a disregarded entity. So even though you're an LLC and you have some liability protection,
Some protection, that's right.
if you are a single member LLC, you are considered a sole proprietor. If you are two or more members, you're a partnership.
Partnership.
That's the default. Now there's ability for both those defaults to make an election to be taxed as a corporation, either a C or an S. But tonight what I want to do is there's a lot of single member LLCs that are basically for IRS purposes only still a sole proprietorship, and same with partnerships. So what I thought we'd do is we'd jump into a tax form. This is so exciting. Welcome to my world, people. This is going to be fun.
Before I get completely shut out, let me ask you one question.
No.
I'm sure.
I'm in control here.
I know you are, and you're going to have it. But so when we started, we talked about forming a small business. We talked about doing your state registration for your LLC or your corporation, and then getting your EIN number from the IRS, which is the
Right.
employer identification number. That's going to be your taxpayer number, right?
Correct.
That's what you're going to use. Now, there are some businesses that are formed that are basically inactive. What's the trigger for having to file your tax return?
Filing for the EIN in itself could generate some correspondence if you don't file a return. Because they'll say, as a single member, you are required to file a Schedule C, or a multi-member, you're required to file a Form 1065. And if you don't do that, even if there's no activity, they may send a letter to you. The trigger is actually when you start doing business. Usually it's when you open a checking account. Not always. I mean, sometimes you got people putting equipment in and they don't get around to it, and they're changing titles on vehicles and stuff, and actually start doing business. So it's, just have to look at the facts and circumstances. But normally when you set up that checking account and there's money going in and coming out, it's time that you are an active business and you're going to develop a filing requirement.
And we want you to do that. We want you to keep a separate business account and run all the business money through the business. And if you
Amen.
have to loan money to the business, call it a loan, put it in the business. If you take a draw out of the business, call it a draw, take out of the business. Don't write a check to Safeway or a grocery store for your groceries. Take money out, put it in your bank account, and go that way.
And that will help your accountant probably more than even you will, just because it's a closed system for that person. Then clients go, well, why do you care? Why do you? I said, look, because if I don't track every dollar in and out of this account, I don't know whether we're getting all of our expenses in. We might be missing something. They go, oh, well, that makes sense. But if I know everything that comes in and everything that's gone out is tracked, then I know whether there's some missing information. We've made an error, there's a math error, or they forgot to include something. So it just
And making it easier for your tax preparer keeps your costs down.
yes.
Yeah,
Only thing we have to sell is time.
that's right.
And we have a limited amount of that. So let's jump into it. Let's look at our first form, which is the number 1040, probably the most recognized tax form in America today.
I hate those things.
Usually for self-employed people, it means taxes owing. Now, I try to simplify this as much as possible, and we have some squishy issues as far as the reproduction on the screen, but you'll be able to tell. And what I did was, and we'll get into, this is going to be a sole proprietor, and they netted, this is their net profit from that, which shows up as $19,400. And this is, to make everything simple, this is the only income, and this is a single person. Okay?
Exactly.
And so their gross income from that is $19,400, and their total income is $19,400. Now you'll see there's, under the subtractions, there's $1,370. And I'm amazed at how many people are self-employed, do not know what that number is, where it comes from, or why it's even there. They just see it and it's there. What it is, if you are an employee, they withhold 7.65% of your wages for Social Security.
Right.
And then they match it. And when they match it, there is, they're getting a deduction for the matching portion.
Exactly. Of course they are.
And so they're getting a tax benefit for that additional. Since you have to pay both ends of the Social Security, then you have to get a benefit for that.
I see you take the deduction.
One half of that Social Security that's paid, one half of it becomes a deduction.
I didn't know that.
See?
I didn't know that.
There we go. We're making headway already.
Well, it makes perfect sense.
If I can teach an attorney, I can teach anybody.
Thank you, Tom.
Now let's look at page 2 of the 1040. All right. And now, once again, it picks up where we leave off after that one deduction for the one half of the Social Security. So we're down to adjusted gross income of $18,030. And at this time, I didn't get to revise because of some changes from what I'm on my page. But we have, it's a single person, only one, their own personal exemption. So they have taxable of that, what's that, 82, 80?
8280.
Yeah, okay. So that gives them a income tax liability of $828. Now remember, we had $19,000, a little over that,
A little bit over
on
that.
net profit. Take a look at the SE tax on that, the Social Security tax.
Which would be 13%.
Yes, $2,383. So this single person with a pretty nominal income, 19,000 and change, is going to have to come up with 3,200 and change as far as the tax bill. Now, if you are used to getting a dribbled out every month or every week out of your check so much you don't really notice it. But if you have to write a check, you know, you start a business and then you spend all your money to live on and buy equipment or whatever you're doing, and then all of a sudden you have to come up with $3,000 when you're sending them that return, and you're only making $19,000 a year, it is very, very difficult to come up with for
Yeah.
people.
Exactly.
So,
So as a hobby business, this wouldn't be too bad. If this was all the money you made last year, you're probably being supported by outside income.
yeah. So it's hard to survive on 19,000.
It is, and that's a
year.
shame, but it's true.
Yeah, very much true. So now let's see where these numbers come from. So let's go to the Schedule C, which is number 2 for our men in the booth there.
Oh, good job.
Yeah. So what we have is this particular individual gross $50,000.
This is a different guy.
No, this is the same
Same
guy.
guy, same
The
guy.
same guy. Now this
Okay.
is his gross. This is what the business brings in.
I see. So that $19,000 is the profit for the
As a
50,
sole
right?
proprietor,
Okay.
LLC, single member LLC, who's
Okay.
not made an election for a corporation, $50,000 is their gross income for the
They sold
business.
50,000 widgets at $1 a piece. Okay.
That's right. You got
All
it.
right.
And let's say the cost of sending those widgets out the door is $20,000.
Okay.
It's called your direct cost, inventory, or in some businesses there's some other items, but
Cost
it's
of
a
manufacture.
cost of
whatever that- yeah.
manufacturing, right. So that leaves us with gross income of $30,000. Now I trumped up a bunch of little expenses in there, and the expenses come out to $10,600. And there's that magic $19,400
And that's
that
where it
we
comes
showed.
from.
That's our net profit
Okay.
from the business. Now, if you're married or if you have lots of other types of income, it's just another line item on the 1040. The 1040 is actually a summary of all the schedules. There's probably 30 or 40, 50 forms that can be attached to in 1040.
Exactly. Well, we've all heard about the 1,000-page tax return.
Yes.
And that's how you get there, is by the long, detailed schedules. Other
I
schedules.
took a seminar from an attorney who said he had one client he did a return for, and this guy would only trust him to do it. And this was a very high price attorney. He said, well, it's going to cost you a little lot. He said, I don't care. You're the only one who does it right. The return was so thick, he had to take it to a bookbinder to get it put together to send it to the IRS. So it was about 8 inches thick.
Yeah.
But he had hundreds of rental properties and stuff, so, yeah.
Well, we've heard about the GE tax return being like 4 feet high or something like
Yeah.
that. Yeah. Same thing.
So, anyway, so let's go on to the page. Oops, which one is this, guys? Hold on
Don't-
for a
whoa,
second.
whoa, whoa,
I
whoa.
blew it. The
Whoa,
Schedule
easy.
SE.
Don't go. Yes. Wait.
Boy, did I recover cool on that one.
Yeah, you look good. You did.
I had my glasses on. Good thing I didn't bring out a pair of
Oh,
magnifying
that's no
glasses.
problem here, folks. Yeah. Just
We're
keep
on-
moving. Keep
we're-
moving.
We're on our A game here. Anyway, Schedule SE. I'll never live this one down.
No, you won't.
Yeah. Anyway, this is Schedule SE. It's called self-employment tax. This is the self-employed person's version of Social Security tax.
Okay.
This is where it's calculated.
Do you know SE starts with the same letters as self-employed?
Really, I never guessed that. Maybe
Yeah.
it's the heading on the form where it says self-employment tax.
could be, yeah.
Yeah, that's just throwing that off the top of my head. And you'll notice on there, it's that 19,400 shows up. And then they take a percentage of that as a compensator for having to pay both ends of it. And so you pay the tax on 17,900. So that's the 2383 that we saw.
We talked about that,
as
yeah.
the self-employment tax that brings our tax liability up to 3,000 and change.
Exactly.
So, and then there's the 1370, which is one half of that, approximately, that you get as a subtraction. So that pretty much takes care of it. There's another page to that form, but very few people need it. It's a very long, cumbersome calculation if you get into that area. But that's the straightforward, the one.
The straightforward stuff.
Straight
yeah.
one.
And that's
Yeah,
what
which-
it's for.
90% of
Self-employment
90% of the
So
self-employed.
the self-employment tax is Social Security, really.
Right.
Yeah. Okay.
Yeah.
We got that? Yeah.
Everybody got that.
Yeah, we got that.
Now, that pretty much takes, there's a couple things that will show on there with depreciation on the Schedule C, and I always advise, if you're doing it yourself, it might become obvious. If you're having somebody else do it, have them explain it to you. Have
Yeah.
them go through it, at least the first time you're dealing with the preparer.
That's right.
Because that's the best way to learn how it is. And like I said, I'm always surprised how many people have been self-employed, and I throw out some terms to them. They go, "Wow, I didn't know that. I didn't know that."
Well, mostly, as I recall, and I used to do the same thing, we take our completed books down to the tax preparer, drop them off, and at the front desk, and we get a telephone call that they're ready to come down and have a check
Bring a
for
check.
X dollars for, and
For the fees,
yeah,
yeah.
and for the fees and for the tax, and away we go. Yeah.
Okay. I told you this was going to be an exciting.
Well, I think it's
exciting.
exciting.
Yeah.
I'm excited.
Now let's go to the 1065.
Oh,
Oh, the partnership.
Wasn't
now
that
we're
the one that
talking
got in
a
trouble?
Yeah, number 5.
all right.
Now we want to go to Form 5, guys. 5 on my list. 1065, page 1. Well, we're having. Oh, there we
there
are.
we go,
Oh,
good.
all right. Now this is the partnership version of the Schedule C. Now the partnership, being a separate entity, files its own tax return.
Exactly.
Self-employed people, it's part of their regular 1040. These other two entities we're going to talk about stand on their own, but they're called pass-through entities, which means the items on their pass-through from the partnership to the individual partners.
So
Now-
that means that the partnership per se is not going to pay a tax.
No,
It's
very
going-
seldom. There's very rare instances that a partnership or an S corporation
would
pays
pay a tax.
taxes.
It would show a loss or a gain to the members of the partnership, and they would add the loss or the gain to their regular 1040, and then that would either increase their tax or lower it.
Okay, can we get that one back up there?
We like that one, yeah, don't
we're
go
gonna
away
go
with
through
that.
that a little bit more. I know it's not as titillating to watch that as Jim and me.
Well, you
where
don't think
everybody
they're
gets a-
drinking again, do you?
I don't think so.
Okay.
All right, so I put this here. I put a gross income of 150,000. It's all fudged up numbers that just make them look nice.
Sure.
And
Fat
$15,000.
tax preparers.
15,000, yeah, right, of cost of goods sold, which meant the direct cost, the same as on this. This reflects in a lot of ways the Schedule C. All right, so we have $135,000, but they call it total income on this form. Then I threw some expenses in there, repairs and maintenance, and a bunch of depreciation because they started up some manufacturing facility. So, and then there's the other deductions, the 8,700, and this is one of those forms that catches all the other expenses that you can't figure out where to put it. And it gets as an attachment to the return, and it'll spell out, bank charges and credit card charges and insurance and all those sorts of things. So I wound up with total $40,000 in deductions. These guys, it's a two-man partnership, a two-person partnership, and they're showing a $94,000 profit. Now the other forms that follow on the 1065 are merely questions about things. Almost always you want a no answer for all of them. They're things like, do you have a foreign partner in it, or did you give distributions out?
Are you engaged in drug smuggling?
Yeah,
But,
yeah, one
yeah,
of those
like
things.
that,
Yeah. So, if when in doubt, don't do a partnership yourself. I mean,
Yeah.
it's a fool's errand, or an S corporation.
It'll get you in trouble if you
Yeah.
fall into one of these exceptions. You need professional help.
Yeah. So, anyway, so now what I want to do is look at the K1 from the partnership,
And
which
this
is number 9 on my list.
number 9.
Yes.
Number 9.
Yeah. Let's try to get it up there before I put my glasses on, because I I look bad enough on this high definition stuff as it is. Now this is for one of the partners, and this is how the IRS knows what you made on the partnership.
Okay, this is
from
what
that-
you attach to your
No,
return.
no,
right?
you do not attach.
You
This
don't-
does not go into the return.
K1s don't?
The partnership files a tax return,
By
and
itself.
the tax return includes the K1s. It's part of the package.
Okay.
But when you file your individual return as a partner, it just stays in your file. It
I
does
see.
not go in.
Okay, you just claim it,
You just claim it.
and they
Yeah.
cross-index it. Mm-hmm. Okay. all
Yes.
right.
And people, almost all of your tax returns, especially if you electronically filed, are cross-referenced to the entity that created it.
That's bad news.
Oh, it is, because if you mess up, and interestingly enough, and there was a congressman who thought it was wrong, but he never got very far with it. If they find it's to their advantage, nothing happens. But if it's not to their advantage, but if it's to their advantage, you'll get an audit letter
Yeah.
saying you owe us the money. So line 1, where you see the 47,257, that is exactly 1/2 of the net profit that showed up on this tax.
On the partnership.
On the partnership.
That's right. Okay.
So that's what you get taxed on. But now if you go down towards the bottom and you'll look, and it says that same number, 47,257, it is subject to self-employment tax, SE, and it goes on that form SE that we
the
looked
Social
at.
Security form. Yes.
So this is one of the areas when you're looking at the S corporation versus partnership and structure. This is the killer, because on $47,000, you're talking about $6,500 of SE tax alone. That doesn't show up anywhere on this form.
no.
It'll show up on the 1040 if I would have done one. We don't have enough time to
That's
do
okay.
sequencing and stuff, but this is just to give you an overview. Okay, so now we've got sole proprietor covered. We got the partnership covered.
Pretty much.
And this is overview. So, I mean, there's a lot of intricacies, how are things like partnerships and S corporations have special allocations, because things of the partnership flow out to the individual.
Okay. Allocations meaning what?
Okay, if you had interest income and dividend income, it's not reported on the 1065. It comes out on your K1 only, because it's called a specially allocated item.
Okay.
And
An
there's
allocation means a division between you and somebody else.
and like the section
Okay.
179 you hear about, where you can expense equipment out in the first year of purchase, it's not a deduction to the partnership. It is just a deduction to the individual partner.
Oh.
So it shows up on their personal tax return via the K1.
Okay.
All right? Now let's jump into the 1120S. We're really going good now.
All right. I like that one.
Yeah.
The 1120
To get
is
up there and
one of
wait
my
for-
favorites.
Yeah, I'm not going to put my glasses on this time.
No,
and embarrass
there's no
myself.
point in- there's
until-
no point in
No,
it.
this is
There
we
Is that we can't?
No,
even
no,
tell.
that's not page 1 of it. That would be number
There we go.
11.
Yeah.
Oh, there we
Oh,
are.
good
We
work,
got
good
it.
work, good
All
work.
right, boys. Using similar numbers, we got $150,000 of gross and direct costs of $25,000 on this one. So we have $125,000 of total income. But now, since this is a partnership, the partners have to get paid a salary, a reasonable salary.
Okay.
And so I put down here $30,000 each, so we have $30,000 of gross profit to the or salaries to the partners, which they get a W-2 like they do from any other company. All right.
All right.
But now that leaves, so total expenses are $89,000, and we have a profit of $36,000. I tried to get very close to the $90-some thousand dollars. So now, if we go to the K1 for the S corporation,
Are we going to change our form?
yeah, we're going to go to the K1 17. We got 17 coming up, buddies. Or do I have to fake it?
Oh, they're going to get it up.
There we go. Hey, way to go, guys.
Excellent work, really.
Okay, We had $36,000 of profit, and this is one of the partners, and one half of that is $18,000. So ordinary business income, and that gets reported on actually another page of Schedule E. It's a second. It doesn't go on the front line like some of the other.
What's
so
the name of this one? This is
a K1.
And that's
So
the one
it's
we
18.
talked about, the K1.
A
Okay.
K1, but there's a K1 for 1120S and K1 for several other entities,
For our purposes, though,
partnerships and
K1,
trust.
K1,
K1
partnership,
is all you
yeah.
have to remember.
Okay, K1's where you.
This one, though, we had depreciation, and we took the section 179, another specially allocated item, 5,000. A lot of times, I'll get new clients who go, "That last guy didn't take my depreciation." I look at the returns. Well, here it is. It's 5,000 and shows up here on line 11. All right, and then they also disclose on the K1. Distributions and $20,000. And the
That's
reason
money.
they
Okay,
want
yeah.
that is people, what if they would have showed wages not of 60,000 but of 20,000 and took out $60,000 in distributions? The IRS says you have to have a reasonable salary. If you have a low, unreasonably low, you're not paying the SE tax like you're supposed to, or Social Security tax.
Self-employment tax,
Right.
Social Security.
Right, so the W-2 is going to be grossly understated.
I see.
So but there's no guidelines, because there are times where if you make too much money, they'll say it's unreasonably high. And so you just have to go on guesswork. There's no definitive stuff coming out of the IRS on that, other
Okay.
than kind of look at what everybody else is doing.
And so, for our purposes, though, we need, this is what form is that again now?
This is
That's
a
the
K1.
K1, and that's an important form. And
Yeah.
that's the one that's going to go
There's
in
one
with
other,
partnership.
and these things come into page 2 of the Schedule E that'll show up on your tax return when you do that, which just lists each of these type of entities and how much you got out of it.
Okay.
So,
Well, I think that, actually, I learned a couple of things. I appreciate you going through that. So, are we done, or are we getting
well,
close? Have we got any
unless you have any jokes you want to finish
more? Well, I
telling
do.
about
Three guys walk, no. Let me ask you a question. Partnerships,
Okay.
real quickly. Partnerships, they're getting a W-2. Do they have to pay quarterly Social Security and withholding?
Partnerships can't give W-2 wages. They can give them guaranteed payments, which is
Okay.
subject to SE tax, and you have to do quarterly payments.
if it's enough, you have
but
to
you
pay.
cannot take a W-2 out of a partnership.
Okay,
I've run into that in the past, and we got to go back and amend all the reports
Okay,
and everything.
All right.
Yes, good question though.
Okay.
And it
See, I
happens.
was listening.
Yeah.
Yeah, exactly.
I'm surprised I kept you awake on
Well,
this
no,
one.
I love this stuff, really. I mean, this is good stuff. So, in rep, you can see this fairly complicated. What we're trying to do is make you conversant enough to talk to your tax preparer, and in the event that you do have to prepare one yourself, that you kind of know that it's complicated. You know where you can go and where you can't go, and if it just
Yeah.
gets to be too much, well, you got to spend the money and get somebody to do it for you.
Yeah.
So it's an important thing. Important to keep up on your taxes. You know?
Yeah,
Yeah.
it is.
Important to understand how devastating that Social Security can be. That's a surprise usually.
Big surprise.
Big surprise, yeah.
Unpleasant too.
Unpleasant surprise for self-employed people, absolutely. So, well, so we didn't get to everything, and we're going to do some corporate tax work in the future, right?
Oh yeah,
Okay.
there's always more.
Okay. Yeah. Isn't that wonderful? I'm so happy. We can.
Taking care of business.